Doc, thank you so much for joining us today.
It's my pleasure. Always great to be with you, Elijah.
All right. Well, I'd first like to discuss about the precious metal markets. Now, you were recently talking on a podcast about how gold, it seems like, might be breaking out soon past the $1,300 level, and it doesn't seem like there's a lot of resistance until maybe the 16 or 1650 level you were telling me. So it seems like it could spike and move very fast if it broke through 1,300. Did you want to discuss about this?
Yeah, certainly we can talk about that, Elijah. And yeah, I think if gold puts in a weekly close above about 1308, 1310 area, basically making a new weekly close as a higher high, certainly could see a quite rapid move up towards, and yeah, I think the next really major resistance level, if gold were to clear that, is around the 1600 level. That 1600, 1650 held as pretty strong support back. It's been 4 or 5 years ago now. It's a level that a lot of your listeners may remember. Jim Sinclair said gold would not trade below it, and he was right for quite a while until it did. And once it did break that level, it plunged quite rapidly. So that is a significant level, but there's quite a bit of open air between the levels we're at right now and those levels. So on a technical level, if gold confirms a new move is underway, all of the funds and the hedgies are going to look at that and rush back into the trade. A little bit shorter term outlook. Right now, the markets are discounting gold a little bit here. We're recording this Tuesday ahead of the Brexit vote. Is now the markets have basically concluded that Brexit's not happening, so gold's selling off a little bit. I think it's likely going to be a case of 3 taps and out for gold at the 1300 level. Gold's made 2 challenges now in 1300. Lots of times big key levels like that, it'll take 3 attempts, and then on the 3rd attempt, it'll break through and move. So I wouldn't be surprised if we see that here this time in gold.
Do you anticipate something similar happening in the silver market?
Yeah, silver, first it needs to take over the 18 level. The critical number for silver that will really get some excitement back in the market is a move back above 20. If silver moves through 20 and starts rising, that's the time that people are going to start to get excited about silver. In my opinion, we'll see.
All right. I mean, so what kind of resistance is there above $20? Could it go up very fast after that?
It certainly could. For silver, maybe tiny resistance at 22, but really after that, it's $26. So silver could move kind of like gold from 1,300 close to 1,600. You could easily see silver make a quick move from 20 to 26 if the bull market gets really underway and established, and you start to see some of the big money moving back into the sector.
Now, what about physical demand for precious metals? At SD Bullion, what kind of physical demand have you been seeing?
Happy to answer the question. SD Bullion, I have to preface it a little bit. We're in a pretty rapid growth stage of our business. We've grown pretty rapidly over the last couple of years to, I think we're the 6th or 7th largest bullion dealer in the country now. So what we're seeing right now is a little bit different than the market overall. Overall, from talking to the wholesalers, the suppliers, the Mint's authorized purchasers, the demand has slowed down a little bit over the last probably 4 to 6 weeks. Now, that's basically saying that's from the levels we've saw over the last 6 to 12 months. I mean, demand is still strong, but it has backed off a bit from what we saw in Q3, Q4 of last year, and Q1 of this year. I mean, we're not seeing much of a slowdown at all at SD Bullion because, I mean, our customer base is more than doubled since 12 months ago. So, we're in a growth phase in the business that kind of masks a little bit what the overall market's doing. The overall market, I think right now, the big money that bought the bottom, they already made their big purchases around $13.80, $14 silver, and gold. When gold was under 1,100, I think the lows were around 1070, maybe a couple bucks lower than that, I forget offhand. But so the big money entered the market at that point. And I mean, they continue to, but in a big way. There was just massive flows in the market right then. And then right now, I think a lot of people are waiting to see, are we going to retest those lows, or is the bull market really underway? So one way or another, if gold and silver do take out those highs from last year and place higher highs, if you see gold start to move through 1315 towards 1400, and if you see silver clear 18 and clear 20 and start to move, there's going to be a lot of physical demand that's really waiting on the sidelines right now, waiting to see what the metals are going to do. And I guess to put that into context, one last point here. I mean, you're still talking, the U.S. Mint sold just shy of 25 million coins, and it's June 21st. We're not even halfway through the year, and they're on pace to set a new all-time record by 5 to 10 million coins.
It seems like you were saying that there's been a lot of demand recently, especially for the Silver Eagles. Are you thinking that the demand we're seeing in the physical market, that's not being reflected in the paper price of gold and silver, like the spot price?
Yeah, I mean, right now the paper futures markets are the tail that wags the dog. It's been that way for a while, and until the bankers run out of metal that they can use to game the system, it'll probably continue like that. But they also do trade for profit, so you can see them. You can see times when they do. The paper pushes the physical price up to the upside rather quickly. But yeah, certainly right now, the paper future markets, I mean, they're leveraged over 100 to 1. So certainly they're what determines the price right now. But I don't think that's going to stay that way forever.
How do you see the manipulation would eventually end? What would trigger that?
Well, the manipulation ends when it gets too costly for the bullion banks and the central banks to carry it out. So just like you saw in the 70s, the manipulated price and the buy-tiered price for gold, that ended when the U.S. government was tired of losing massive amounts of gold just being drained out and sold internationally because they had a buy-tiered system. So the system ends when they get tired of losing money to throwing good money after bad to keep it going. And when you have the general market finally see gold and silver and see a bull market underway and finally join in, that's when I would expect to throw in the towel and let it move to the upside. I mean, either that or the bankers, if you're the bankers, you get ahead of it and you revalue gold and you do it in one swoop. So it's going to end in either one of two ways. Either they're going to get overwhelmed by the general population and just that's going to be it, or they're going to try to get ahead of that and revalue gold themselves.
Now, you mentioned before that the Brexit vote, the markets are acting as if the UK will stay in the European Union. What is your perspective on, or do you see the UK leaving the European Union? And if so, how do you see that the markets would react?
First of all, no, I don't see Britain leaving the EU anytime soon. I mean, all you need to do is take a look at Greece last year in the Grexit vote. And even when all the Greeks voted to leave, it didn't happen. So, and Britain's much more important to the EU than Greece is. I mean, Greece is much smaller economy-wise. And I mean, they're a big debtor nation. I mean, obviously, they couldn't allow Greece to leave because then Portugal, Italy, Spain would want to leave or would want some debt write-offs for them too. But I mean, just take a look at history. So based on that and everything we've seen, I don't see any way they allow Britain to leave, no.
Now, I'd like to discuss a little bit about the Fed's interest rates. Now, Yellen just made a speech today, and she was saying that the Fed is not in a hurry to raise interest rates because of the weak Chinese economy and the weak U.S. economy, and also the fear about the Brexit vote. I guess, what is your perspective on this?
What's my perspective on will they or won't they? I mean, it's a charade that's been going on for 8 years now. I just saw some commentary posted the other day from Bernanke's speech, and I think 2010 warning, in which he stated that at that point they're going to delay interest rate hikes until early 2011. So we're talking 5.5 years again. This same charade was going on that the Fed acts like every single year they act like, oh, we'll raise rates second half of the year, and then the second half of the year comes around and it's delayed a little bit. I mean, finally, it took 8 years to raise interest rates 1/4%. Do I think it's going to happen? I mean, you might see one or two more token rate hikes, but I mean, it's a joke, really. I think Peter Schiff called it right the other day when he said it. As far as anything imminent, he thinks we're more likely to have an alien invasion before we have a rate hike in July. So take that however you want.
All right. And I mean, how do you see then just the markets and, like, for example, the stock market continuing to rise indefinitely if the Fed just keeps interest rates low?
Well, it's not going to happen indefinitely, but I mean, they're reblowing the bubbles in the stock market. The housing market bubble is reblowing. It's just a little bit different than it was last time. You have the addition of Chinese money laundering money coming in this time, especially on the West Coast. So it's history doesn't repeat exactly, but it does rhyme, and you can certainly see signs of reflating of bubbles in several different asset classes right now.
All right. Well, I'd like to move our focus now to some viewers' questions. This first viewer is wanting to know, do you see any chance that the U.S. government will attempt to confiscate precious metals, directly confiscate, or possibly just impose an exorbitant capital gains tax on personal sales of precious metals?
Sure. It's a great question, and it's a concern and question for many precious metals investors. So I think going back, look at the 1930s. There wasn't any door-to-door confiscation. That never happened. And back then, people actually owned gold. Gold was money. So right now, today, 2016, general population in the U.S. owns no gold. Any gold that they do have via their grandparents' coins or jewelry or whatever, in the last 10 years, they've sold it to the We Buy Gold stores in the corner to buy their new iPhone. So, no, I don't believe that gold confiscation is likely coming. I mean, honestly, I would be shocked if the U.S. government implemented gold confiscation. What I do think is more possible or likely would be, like you said, some sort of tax on it, or even talking confiscation. What I do think could be possible with confiscation is at a mine level. So not talking individual gold. We're talking about the government says, okay, all the gold miners in the country, we're now nationalizing the mines. All your gold is now belong to us. So that I think certainly is possible because the gold mines actually do have gold in the ground. And it's actually much easier to just pass a mandate and nationalize a mine than it is to actually implement door-to-door confiscation of gold. That's just not practical, especially when our citizens don't even have gold. And looking back historically, that wasn't conducted even when our citizens did have gold. So I think taxes are certainly on the table. I think mine confiscation and nationalization is something that I wouldn't be surprised if they looked at either. So you're talking more risk for holding miners in that case than the actual physical. But again, that's just my own opinion and what I see as most likely.
All right, now moving on to this next viewer's question. This viewer wants to know, do you recommend overseas storage of precious metals? If so, any particular location?
Yeah, I mean, preface it with I'm not a licensed investment advisor, so I can't give advice per se. But it's always, in my opinion, a good idea to diversify risk. And that can mean multiple things. It can mean, number one, diversifying into precious metals. If you've done that, diversifying your precious metals. And also that can include where you store and hold them. So whether that be holding some here, some abroad, some in your own possession. I mean, anything held in a bank vault, safety deposit box or something like that, I wouldn't be counting on to have that no matter what. So I've heard some wise advice that never hold all of your assets in the same country that you live and are a citizen of. So it doesn't mean you can't hold any, but don't hold all of your goose eggs in the same country that you live and are a citizen of. I think that's probably pretty good advice.
All right. Well, this last viewer question is, what is your perspective on the best coins or rounds to invest in silver with? Sure.
Again, really all I can do is give my opinion on this. What I personally like, my own personal silver purchases and silver investments, I probably buy the most 90%, and it really will depend on what premiums are like at the time. 90% is probably the silver product that moves the most premium wise. I mean, it can go from, I think 3 or 4 years ago, 90% silver was selling at around spot, maybe 30 to 40 cents over spot. You could buy it in the retail market. To recently in the past year, it was selling, I think, about $5 over spot. And actually, if you go back a little bit further, during the Y2K crisis, when everybody freaked out, the premiums reached about 100% of the actual physical spot price in 90%. For those who aren't really familiar with 90% silver are official U.S. silver coinage, silver dimes, quarters, half dollars that were minted in 1964 or prior that are composed of 90% silver. So that's really the item that I personally, for me, I like to buy when premiums are low, and you can really arbitrage the premium spread as well as the silver spot price, meaning that if you acquire or purchase some 90% silver when premiums are low in 90%, you can perhaps, if you like to, you can sell it in exchange for silver rounds or bars or eagles or whatever during periods when the premiums jump, when there's not a lot of 90% in the market. Now, you need to speak with your tax advisor because there can be, depending on how much you sell, there can be tax implications for that. But that's one thing I like. And then the other thing I like are the America the Beautiful 5-ounce coins from the U.S. Mint. They're official products from the U.S. Mint. They have really low mintage. A lot of them have 30,000 piece mintages or lower. Some of them a bit higher than that, but they're all only minted for a couple of months, and then that's it forever. And a lot of the previous coins, once the mintage is over, the premiums have risen quite dramatically. And it's something that is available if you pick them up when they're being minted. Lots of times they're available for really not too much more than the price of a silver eagle. So it's just another way that you can arbitrage premium for a potential to have gains in premium as well as actual market price of silver. So, and then a couple of similar things to that are the Canadian Mint has 1-ounce series. They ran originally the Wildlife series and the Birds of Prey. Right now they're running a Predator series, and each one has 1 million coins. So that's another thing too, where if you purchase the coins when they're first minted before they go out of production, a lot of the previous coins and releases have appreciated quite a bit once they're no longer created. So that's just a couple things to think about and keep in mind. But it really depends on the person. As long as you're paying not too much off of the silver spot price, or basically like not paying huge premiums for rare collector's coins, that's a different animal entirely. You're more of a coin collector than just a stacker or an investor in silver. There's lots of different options, and lots of people have different preferences. So my opinions on what I like might be totally different than yours or any of the 10,000 new customers we see. Everybody's different in what they like. Some people only buy 100-ounce bars. Some people only buy 10-ounce bars. Some people only buy silver eagles, and some people only buy whatever's the cheapest premium they can find at that time. So I guess that's my 2 cents on that.
All right. Well, the doc from silverdoctors.com, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you on the internet?
Sure. You can find all of the articles on silverdoctors.com and the News Doctors. And then the site Purchase Gold and Silver is sdbullion.com.